During the days of the gold rush, two men, a man and his uncle, became consumed by the gold bug, or the gold virus, if you will. After discovering some of the shining ore in their Colorado mine, they went home and raised money from friends and family to buy all of the machinery necessary to ramp up production. Back at the mine, the first cart of ore was mined and shipped to the smelter. The return on that cart proved that they had one of the richest mines in all of Colorado. A few more carts like that, and they would be clear of their debts, and the rest would be pure profit. Down went the drills, up went the hopes of the two men until something unthinkable happened. The vein of gold ore disappeared. They had come to the end of the rainbow, and the pot of gold was no longer there. They desperately drilled on, but to no avail. Finally, they decided to quit. They sold the machinery to a junkman for a few $100s and took the train back home with nothing but piles of debt and lost opportunity. The junkman immediately took action and called in a mining engineer to look at the mine and do some calculating. The engineer advised the junkman that the project had failed because the two men were not familiar with fault lines. His calculations showed that the vein would be found just 3 feet from where the two men had stopped drilling. And that is exactly where it was found. The junkman took millions of dollars of gold from that mine. My name is Spencer Ford, and I'm a certified financial planner with Conservative Financial Solutions. Thank you for being here. There are so many lessons to be taken from the two men who just stopped 3 feet from gold. But today, I want to hone in on just one thing. Now, as we get into this program here, please keep in mind that I'm going to talk about some different financial vehicles, but each individual situation is different. So please take that into consideration before making any decisions about your investments. Also, our economy is fluctuating daily. So please be sure to do your own research and stay up to date on what's happening in the world and with your investments. You are under no obligation, but at the end of this presentation, you will receive an invitation to schedule a call with one of our wealth advisors if that's something that you would like to take advantage of. Now, let's get back to our story of the two men who stopped just 3 feet from gold. I want you to take yourself back to 2008. I know, it's not a place any of us like to go or even like to remember. But let's say that after 17 months of almost consecutive losses, you finally said enough was enough and you threw in the towel. You went to cash. Let's say you made that decision on March 5th, 2009. Your timing would have been quite unfortunate because just 3 days later, the market really started to hit its stride, and which means that you stopped just 3 feet from the gold. Now, here's the biggest question. When were you comfortable enough to get back in the market? Did it take you 6 months? Did it take you a year? Did it take you longer? If it took you a year, you already missed 64% of the recovery, and the time it took you to get back to break even was substantially increased. We're not talking about months longer, we're talking about years longer to get back to break even. Now, no market downturn is fun, especially not the one we're experiencing right now due to the coronavirus. The simple truth is no one has a crystal ball. No one knows where the tippy top of the market is, and no one knows where the bottom is for certain. The average investor loses money in the market because they get nervous during the downturns and they sell. Then the market recovers and they buy, essentially buying high and selling low, the exact opposite of the way that you make money in the market. We believe that the highest dividends are paid to those who stay the course and work off of a plan. We've all heard the quote from Benjamin Franklin, "Failing to plan is planning to fail." For many of you listening to this, you are either in retirement or you're getting close. At the very least, you're closer to retirement today than you were yesterday. You can't expect to be successful in retirement, which is essentially the longest period of unemployment you will ever face, without having a rock solid plan. A plan that produces in both the good times and the bad. Each plan we build for our clients has built-in safety nets, places that we can go to for income when the market is doing well and when the market's doing what it's doing right now and there's extreme volatility. Rest assured, if you are one of our clients, we are striving every day to make sure that you and your portfolio is well taken care of. If you aren't a client and you would like to get to know us better, feel free to schedule a 15-minute phone call with one of our wealth advisors by clicking the link above. Thank you for your time and attention. Stay the course. History has proven time and time again that these are the best times to invest. Know your plan and work your plan. Don't stop 3 feet from the gold. Thank you.